Traders, welcome back to Forex Scope. I'm thrilled to have you here today as we dive deep into the exciting world of Forex. In this video, we're going to be laser focused on EUR GBP, dissecting it with both the 15-minute and 1-minute timeframes to uncover those crucial trading opportunities. We'll be looking at potential buy and sell signals and charting the likely price movements ahead. If you're looking to sharpen your Forex game and stay ahead of the curve, you've come to the right place. Don't forget to hit that subscribe button and ring the notification bell so you never miss out on our in-depth analyses and actionable insights. Let's get started and make some smart moves today. The resistance zone is identified around the price range of 0.88037 to 0.88090, based on the price action observed between the timestamps 176-224-9500 and 176-225-0400. This area shows multiple bearish candles with significant downward movement, indicating strong selling pressure. Specifically, the candle ending at 176-224-9500, 10 hours and 45 minutes on November 4, 2025, and the subsequent candle ending at 176-225-0400, 11 hours on November 4, 2025, show clear rejections from the upper boundary of this zone, with the high price within this timeframe reaching 0.88077 and the low price dipping to 0.88026. The presence of these price rejections, coupled with the bearish sentiment displayed by the candles within this zone, suggests that this price level acted as a significant barrier to further upward movement. The volume during this period also indicates increased activity, supporting the notion of a well-defined resistance. This zone also aligns with the criteria of being above the price of 0.88039, and it exhibits signs of potential trading interest, where sellers might have stepped in to push the price down. The formation of these candles suggests a consolidation or a turning point before a potential downward move. The support zone is established between the price range of 0.87933 and 0.87950, observed during the timestamps 176-225-5800 and 176-225-6700. This area is characterized by several candles that show a clear bounce from the lower boundary, indicating buying interest. The candles within this range, specifically the one ending at 176-225-5800, 11 hours and 30 minutes on November 4, 2025, and the one ending at 176-225-6700, 11 hours and 45 minutes on November 4, 2025, demonstrate upward price action after touching or nearing the lower limit of this zone. The high price achieved within this timeframe reached 0.88003, while the low price touched 0.87933. The presence of strong upward wicks on some candles and the subsequent price recovery suggest that buyers were actively defending this level. This area also meets the criteria of being below the price of 0.88012 and having a substantial separation from the identified resistance. The consolidation and repeated testing of this price level, coupled with the observed buying pressure, point to it acting as a solid support, where demand is sufficient to halt further price declines and potentially initiate an upward reversal. The support zone is identified between the prices of 0.87925 and 0.87949. This area shows significant price action characteristics, particularly within the timestamps from 176-225-9040 to 176-225-9280. Observing the price movements, we can see multiple instances where the price approached this lower bound, struggled to break through, and showed signs of rejection. For example, the low price of 0.87903 was briefly touched before a rebound occurred. The price then consolidated around the upper limit of this zone before attempting further upward movement. This repeated interaction with these price levels, where buying pressure seemed to absorb selling pressure, indicates a strong area of support. The presence of several candles with substantial lower wicks or those that closed near their lows after touching this price range further confirms its significance as a floor in the market. The volume during these periods also suggests increased trading activity around these levels, reinforcing the belief in its ability to halt further declines. The distinct accumulation phase observed between 0.87925 and 0.87949, with several minutes of trading within this narrow band, highlights a period of indecision or accumulation before a potential price move, a classic sign of a robust support. The resistance zone is established between the prices of 0.88032 and 0.88039. This area exhibits clear signs of selling pressure, as evidenced by the price action within the timeframe from 176-226-7380 to 176-226-7620. The price repeatedly approached the upper boundary of this zone but failed to sustain a break above it, indicating strong resistance. Specifically, a high price reached was 0.88039, which then led to a subsequent price decline. The presence of candles with significant upper wicks or those that closed near their highs after touching these levels suggests that sellers were actively defending this price territory. Furthermore, the volume observed during these attempts to push higher implies that considerable trading interest existed at these resistance levels, leading to a reversal. The brief periods of trading within this tight range, followed by a clear rejection, demonstrate a strong ceiling that prevented further upward price movement. The consistent inability of the price to break and hold above 0.88039, despite multiple attempts, solidifies its role as a significant resistance level, signaling a potential turning point or a pause in any bullish momentum. The interaction of price with these upper limits, where it was met with strong selling forces, defines this zone as a key resistance area. The Fibonacci sequence, with the starting point at 0.87960 and the end point at 0.88037, indicates an upward trend. The current price of 0.88026 is positioned within this upward Fibonacci retracement, suggesting continued upward momentum. We observe that the price has recently tested and bounced off a support level around 0.87950, further reinforcing the bullish outlook. The Bollinger Bands are showing some expansion, which could signal increasing volatility. The tick volume has been moderate, but there are spikes that suggest buying interest at lower levels. Considering these factors, the price is expected to retest higher resistance levels. A potential target could be near the previous high of 0.88039, possibly pushing towards the 0.88050 mark. However, the market is dynamic, and pullbacks are natural. We anticipate a potential retracement to the 0.88015 level, which aligns with a Fibonacci retracement level, before potentially resuming the upward move towards 0.88030. A further dip to 0.87990 is possible if selling pressure intensifies, but we expect support to emerge around this area, leading to another upward push towards 0.88010. The overall sentiment, supported by the Fibonacci extension and recent price action, points towards a bullish continuation, with the potential for the price to explore higher grounds in the near future, although short-term fluctuations are expected. The confluence of support levels and the upward trend indicated by the Fibonacci levels create a compelling case for a continued upward bias, with the possibility of retesting previous highs and potentially breaking through them.